Can we start, please, with your short introduction, maybe like a few words about you, more about your background? Let's start with Pieter and go.
Hi, everybody. Thanks for coming. My name is Pieter Dalstra. I'm based in Amsterdam. We have a liquid token fund in digital assets. We have a directional and delta neutral strategy catering to family offices, high net worth individuals, and institutions.
Hello, everyone. Can you hear me? Oh, thank you. I'm Gaia. I'm the CEO and co-founder of Byzantine Finance. Byzantine started around a year ago. We focus on structured products, cross-chain, and cross multiple protocols. And we have a specific focus for traditional finance institutions, essentially allowing them to deploy capital into different kind of products, focusing now on a money market fund. Yeah, we're currently 10 in the team and raised almost 4 million in December. And yeah.
Hi everyone, my name is Stefano. Sorry, I hear my voice super loud. Okay, I'll try to focus. I'm CEO of Safety on Chain and also co-founder of 333 Builders, which is a community-based, let's say, entity. We in SOC, let's say that we tokenize paper for the middleman, like for actually the Zio Pino, let's say. Thank you.
Thank you so much. I want to start with a short question, just like to define better the topic. Can you, like in few sentences, say what does real accessibility of blockchain to businesses means nowadays? Let's start also with Pieter.
Yeah, blockchain opens a whole new spectrum and market for businesses. Of course, you have the Web2, the traditional means, the rails and the market, but yeah, blockchain also with DeFi or other decentralized applications, so opens a whole new market. For example, it's permissionless, it's immutable. You can trail, there's an audit trail, so that unlocks a lot of interesting characteristics businesses can use for compliance or audit purposes. So it's really what you make of it.
Yeah, I agree with that. I think I have a more, let's say, a spicy view of this industry. And what I mean with this is that, in my opinion, blockchain technology is this layer of different use cases that can be built. And crypto is just one of the multiple use cases that can be built on it. Might be here to stay, might not, but I believe that blockchain's technology is. And what we at Byzantine believe is that blockchain can be used to make finance and traditional finance more efficient. For example, where you have products that require a lot of perfect liquidity, so essentially being able to remove the capital right away, or essentially, yes, off-ramping it in a very fast way, such as in money market funds is one of the examples, or where there's a lot of back office. We believe that blockchain technology can really help out removing all of those inefficiencies.
That's very interesting because we were born in 2022 with the community. We helped over 40 Web3 founders, and back then I think that it was mainly technology-led, let's say, tool. But then the reality, like we actually face to non-financial businesses, and we found out that it's just an infrastructure. Like the real thing here is the user experience, the regulation, the benefit for our customer. So I would say that we use blockchain technology, but we don't even declare it. We use it like an infrastructure, like internet. It's just the customer.
Thank you. Stefano, what's the main difficulty introducing blockchain solutions to traditional structures and flows in your experience?
In our experience, we need to step back a little, and we need to really think about normal businesses. So actually the farmers, the industry, the manufacturing, the commercials, like they, it's not really real thinking that everyone will have a wallet, you know. So we're doing that. We are bringing people on chain without let them know, okay, just with the bottom. With the bottom, they sign, they engage, they interact, and with this, we actually are bringing value to our customers, which is mainly for the automation, the transparency, and the efficiency.
Continuing this, how do you see, Gaia, it's the question for you, the trust in on-chain world? So what are the differences? What are the main characteristics of it?
Yeah, absolutely. I think that I very much agree with Stefano sometimes, and I think that has been a topic for a very long while. But UX/UI crypto really needs to be improved, especially for traditional finance institutions or Web2 companies that want to deploy capital into DeFi or yeah, essentially any kind of financial product on chain. And I think that the blockers that are the largest ones are the trust. So essentially, the kind of institution that is issuing the product itself. Because if you think about it, one of the most important things that those, like for example, banks, funds, or companies have is the trustworthiness. And what they want is that all the partners that they work with respect that, because it's the single most important thing that when they go out and sell, they have to sell and therefore keep up with all the partners that they work with. So, for example, how we handle it on our end is that we work with institutions that are known by them, so that there's essentially Byzantine, that is a protocol, is decentralized and might be perceived by them not as trustworthy as a regulated institution, but we work with the kind of institution that they're used to work, that they know, so that the level of trust is right away increased. And the second thing that I think is very important for them is really risk. They don't want to get very high levels of risk, and that can definitely be solved with, for example, delta neutral strategies or staking, for example, lending. But this needs to be brought to the market in a way that is accepted by those institutions. And I feel like sometimes crypto forgets that it's not about imposing the product and the technology onto the clients, but actually meeting the clients where they are and building for them.
Okay, that's very interesting as well. So Stefano, can you please share some experience in applying like tokenization protocols to traditional finance infrastructure?
Our first case was tokenizing safety certifications, which are documents that are demanded by the state. If you have, let's say, employees, the employees need to have some kind of training in safety. So everyone needs that, and the UX in the real life is quite messy. So can you imagine, do the training, printing all the attestations, let them sign, digitalizing, send through email, waiting for the response, and then to save it in a database. So with our technology, we are automated all these processes just with the button, and actually the trainee just need to click a button. In this case, we are taking the sign, meeting in an NFTs, and let the others to verify actually the training. And the most important thing is that our customers save 80% of the time. So we actually go to our client to say, we do this, and you can save, let's say, 2 people a year not doing that. So you can reallocate these people in other processes. So we don't even mention that we're using blockchain. So that is the approach for me for not financial businesses. They just care about the benefit and the UX. For larger corporations, let's say they use different softwares, so the API integration is it's really a plus.
Peter, I would like to hear your perspective on how we can apply DeFi to improve the capital efficiency of businesses. So how can we improve all the processes using the DeFi instruments?
Yeah, so DeFi, as we've spoken about before, is just a whole new market. Obviously, you have the Web2 financial services, but in DeFi, in a peer-to-peer way, you can, or people or protocols can create new ones. For example, in the Netherlands, you have a very big real estate market. Amsterdam is full of it. And I know that in this market are a lot of real estate developers who have their liquidity locked in basically illiquid assets. They're in high demand, but they're very illiquid. Often they require, sometimes short-term loans, 100, 200, 1 million maybe. But via the traditional ways, they have a credit line, they get 14%, or there's a quite big market of peer-to-peer LPs who charge between 8 and 14%. But it's not always readily available. So in the property market, you could also collateralize your balance sheet, you could collateralize the real estate and take a loan against it. DeFi really enables you to know where the money is flowing, so that the money you borrow is used for the intended purposes. And also in the case of a default, for example, you should trust that after the default process, the money comes back with a big discount. But for example, with Aave, if your collateral falls under the amount you have to repay, you will get liquidated and automatically the collateral is reimbursed to the lender. So also a lot of risks are mitigated versus the traditional means.
Thank you. So we see a lot of opportunities for using DeFi, but can Gaia, please, you expand on the issue? So how to really move from this pretty experiment, as I can say, perspective to real implementation of those solutions?
Yeah, absolutely. First off, I fully agree with what you said. Again, it's all about finding ways of making things and financial products more fluid and essentially solving for all those defects that are in traditional finance. How do we make it bigger though? How do we make it trustworthy? Because I think that is one of the largest problems is to bring essentially those DeFi or blockchain to common use is to, and I again think that sometimes we forget about doing it, is meeting the kind of clients that we're targeting where they are. And I think that, Stefano, you're doing it by just making it extremely easy to implement a blockchain technology without them knowing that they're using it, and it's something very similar to what we do as well. What we notice is that, for example, for many money market funds, when you put your treasury in it, you have 2-3 days to remove the capital from it. So that means that the capital is locked for that amount of time. And there are some other products for which it's even longer. If you're a company and you want to invest your operating capital, that might be a problem because you might need to pay the salaries. And yes, you can organize yourself to do that before, but that also means that you're essentially losing some days of returns that you could otherwise keep. So what we noticed is that there was this illiquidity of this kind of product, and that could have been solved with blockchain, but that most of our clients don't really yeah, don't really trust that technology and might fear of losing the keys, might fear of losing part of the capital or taking too many risks. And the way we handle it is, again, by essentially on-ramping, off-ramping in a really easy way. They don't even need to know that they're necessarily on-ramping, off-ramping. The wallet is created automatically. We work with BitGo to afford the custody so that essentially they don't lose the capital at any point. We work with insurance that are generally well known by traditional finance companies and companies generally in Web 2, so that they, at any point, whatever happens, the principal is insured and they have access to their capital at any point. And then we solve for the actual problem. So, for example, we take down the 2 to 3 days to 30 minutes, so you can remove the capital from the product essentially almost right away. So I would say that to conclude is to be able to be flexible in the solution that you're proposing and meet the clients where they are, solving the needs that they have.
Coming to this issue between intersection of technology and user experience, Stefano, can you please explain what are the main forces that drive the development of solutions in Web3 and blockchain industry? So do we focus primarily on what we can offer from technological point of view, or is it mainly the consumer demand?
The main thing when we started was to implement blockchain in your businesses, you had to do or have three things. First of all, you need to understand a little about the technology. Second of all, you need to understand a little where to put the technology inside of your processes. And third thing was taking your wallet and spend quite a lot in order to implement a custom infrastructure. So all of these components are quite complicated for real life businesses. So we started from that, and with the question, could we apply the tokenization protocols to real regulated processes, and having a business model that doesn't require to the clients to invest upfront a lot of money. So the answer was yes. So we started from the regulation. We started from the business. We didn't start from the technology. The client doesn't know which kind of blockchain we use, for example. They don't care. They essentially don't care. They just want their processes to go on. So from our perspective, non-financial companies, the technology behind is just, sorry guys, it's a Web3 conference, but that's what's happening, from our experience, is just an infrastructure. So it's up to us then to pick the best one. We choose a non-EVM blockchain, public blockchain, for a specific reason, for technical reasons, okay? But it was not the point for us.
Thank you. Since the blockchain is still the technology which was introduced, I would say, to the main market just a few years ago, and we're seeing this rapid development, can we also touch the topic of intersection and synergies between blockchain and AI with Pieter? Can you explain us what can be the main use cases probably and perspectives?
Yes, and this has a lot of facets. Obviously, I think these are the two most hyped words at the moment. All the conferences are about it. But after diving a bit deeper in it, there are a lot of synergies and where these two technologies really complement each other. Let me start with the training of, for example, large language models. So to train LLM, you need two things. You need compute and data. Bitcoin has shown us that in a decentralized fashion, it is possible to attract the largest compute cluster in the world. So to put it in perspective, Bitcoin's hash power is about 500 times larger than the biggest supercomputer in the world, and its magnitudes larger than the data centers of Amazon, Google, and Microsoft combined, and they took 20 years to build this. So if it's possible to get the compute in order and source that in a decentralized fashion, data, and I'm simplifying here, and then data is the other component. With GDPR and privacy rules, it's quite hard to get a lot of data. You can buy it, you can make synthetic data and scale that basically infinitely. But I think the most interesting use case is real life data, for example, medical data. And these are very privacy sensitive subjects because, yeah, you don't want your insurance company to raise your costs because you smoke or you don't sport or whatever reasons. If compute is possible and via other technologies like encryption technologies, Ocean Protocol, or that's maybe now already a bit in the past, but for example, if you can source public data of individuals, of hospitals, of governments, then basically you can get the biggest compute cluster in decentralized fashion and the biggest data cluster in a decentralized fashion. And I would say that it's the architecture for the best models. Of course, there are also there are a lot of facets about this, but on the application side, yeah, now obviously the decentralized financial AI agents are very interesting. I'm not sure if it are really agents or scripts / bots that perform these actions. But what I think is the most interesting element from a more philosophical viewpoint is the governance of these AI models. So AI has been around for quite a long time, but only really reached critical mass and product market fit after the ChatGPT moment in 2020 or 2019. These AI providers like Anthropic or OpenAI, they set the weights and biases. They choose basically with their company based on their culture how these LLMs react, how they go about privacy or racial concerns, and they make the choices for you, which is good if it's well. But we also saw with Gemini in the first iterations that they've also made some mistakes. Preferably, everybody has their own norms and their own values, and they should have AI that also wanders the same path. So these newer projects who then source compute, source data in a decentralized fashion, they could via a token model, for example, let the users and the community decide what the weights and biases will be regarding how to answer, how to go about with different very hard subjects like, for example, how they go about racial concerns or other, these are very tight and difficult subjects for companies to make the decisions on. So to round it all up, I think there are a lot of synergies. The way the decentralized architecture is, it enables us to make the best models and also to govern these models via a community-based, basically bottom-up approach.
We have just talked with Gaia about the trust in on-chain world. Can I come back, Pieter, to you about AI? Does AI transform this concept?
Sorry, can you repeat the question again?
Yes, how AI transforms this concept of trust in blockchain world. So when we apply and we combine blockchain and AI, how does like the trust issues probably evolve?
The trust issues for the users?
For the users, yes.
There's a very nice saying, obviously, don't trust, verify. I think that is mainly a Web 2 phrase, because in Web 3, you don't have to trust. You know the underlying logic, you know if certain actions happen, what the outcome will be. So trust in a Web 3 model, if you know what the weights and biases are, if you know what the input would be, then via the logic, you know what what the output will be. So, or maybe I'm not understanding the question correctly.
No, you're answering it very right. So I was like curious to know how the users probably trust more AI-driven technology, because there are like a lot of people in the industry who says, I would trust AI to construct my portfolio in an example. So how do we see it like in general business field?
That's a good question. So basically, AI is, I often see it as a black box where, yeah, based on the weights and biases and how it's trained, how the logic is in the black box, how the outcome will be. So there's a lot of debate, or actually there's a very fine line between, is it an AI agent or is it basically a bot performing actions? Also because of the non-deterministic nature of, for example, these LLMs, you can ask him 10 times the same question and you get 10 times a different outcome. In portfolio management, especially if it's going about large sums of money, you don't want non-determinism, actually. There are some ways to combat this, for example, use a script or a bot, or instead of asking one agent, let a cluster or a swarm of 1,000 agents handle this, and then take the, if 80% or 90% follows the same path and the requirements like safety and APY and other factors are met, then it can be pushed through. But yeah, their AI agents, they are also not biased, or they also don't have personal preferences for a certain outcome. They just get rewarded, or they just work on a reward function. If you set the rewards and you align incentives with your AI with the desired outcome, then if you create a compelling system, then it will always follow the desired outcome.
Thank you. We have explored the topic. As we said, all of you, DeFi provides many opportunities for businesses. Stefano, a question for you right now. So what are the main drivers for traditional business to say, I want to use DeFi, I want to implement those solutions in my structure? So once you discover the solution, you probably will know, so it's very beneficial for your business structure. But what is this first step? What pushes, I don't know, the CEO of the company to pursue this path?
Can you say again the question? Sorry.
What is the main driver to adopt blockchain to traditional business? So why would I, as a CEO or manager of the company, would like to apply blockchain to it?
Well, mainly, companies demands automation, transparency, some of them, and security. So they demand that. They don't demand blockchain. Like in non-financial companies, they demand the benefit, they demand a clear ROI, okay? They don't like uncertainty. So the area of marketing purpose is finished, mainly. So I'm completely agree with what Gaia said before. Crypto is a use case, and unfortunately, users associate too much crypto and blockchain. So I think that our duty is to understand that and formalize a way to communicate properly the benefit and not the technology itself.
I see Gaia has some things to add. Probably will hear you.
Yeah, I agree. I'd love to, add a couple of words about it. Yeah, I fully agree. And with this, what I mean is that sometimes we see a lot of companies that have product market fit by just selling a very crypto native product. But I feel like those businesses have product market fit as of now, but in the long run, the businesses that will be there are the ones that are solving for an actual problem. And then, of course, the ones that are able to constantly evolve, because at the end, every business is can find product market fit now, but then you have to keep it, and it's complicated, and you have to evolve and being flexible. But I think that the ones that are here to stay in the long term are the ones that are actually using the technology to solve a problem. And the problem might be, for example, access to something or solving some kind of inefficiencies. And again, for example, the case of the back office in banks, where there's specific rules, but it's just a lot of people that have to take care of a lot of papers every day. And that can be automatized and can be verified on chain, for example. And again, I agree also on the fact of people don't necessarily need to know the kind of technology that you're using. Think about when you use ChatGPT. Do you know which kind of model are you running on? Do you know the specificities of it? Not necessarily. Do you still use it? Is it still solving for some kind of problems, for some kind of utilities that that you're looking for? Yes. So what I think is that more often we should see businesses that focus on a specific problem that they want to solve rather than technology itself.
Thank you so much. I think we are running out of time, so probably we can move to the question part. I think some of you probably would have some questions to ask to our panelists. Yes, please.
I can take this one. Well, it depends. I would say it depends on the company that you're targeting. So if you're targeting, for example, a Web2 company, the kind of product that we issue, one of the multiple products that we have is a money market fund. Very similar to traditional finance. So essentially, generally traditional finance, the money market fund is composed of short-term T-bills. So essentially, very low risk. What we do is that we construct it on Aave, Morpho, Maker, and Compound, making sure that the risk profile stays really low, but with a liquidity of the assets that is much, much higher. And what I mean with this is that one of the problems that we figured out during our discovery phase is that a lot of companies, yes, have a lot of operating capital that is sitting in a bank account because they're, well, on one hand, they're scared of losing it, so they absolutely don't want to take any risk on the principal. And the second thing is that they want access to it right away, right? Because tomorrow you might have to, I don't know, buy something that you really need or the company needs. So you want your capital to be fully liquid. And so we found those two problems, and we figured out that with, for example, insurance and with blockchain technology, we could solve the liquidity and the trustworthiness and the security of the product. But on top, also cutting down a lot of the fees that otherwise you pay. So one of the things that I believe has product market fit in crypto is cutting down the fees that are created by all the middlemen that are within financial products. And for example, in money market funds, there's the issuer, there's whoever rebalances the product constantly, then there's generally the distributor. But what if we are the one that create the product and the distributor, and plus is on chain, so we have much less fees than other product issuers, for example. So the bottom line is that we allow for much more liquidity, a much more liquid product, high returns because we cut down fees, and also because lending offer more interesting yield than T-bills as of now, and essentially transparency of the portfolio and of the rebalancing, which is not necessarily the case for all the financial products.
Yeah, and if I might add to that, this is exactly what I was also going to say. The financial market loves capital efficiency and it loves leverage. Also in 2008, we saw these CDO markets first getting bundled, then you can take a loan against them again, and then you bundle them again, and then you take a loan against them again. And now in crypto, we're seeing the same phenomenon. For example, Ethereum, you can stake it, oh great. Then liquidity was locked, so we got liquid staking protocols to get the liquidity back so you can loan against it again. Well, now with Eigenlayer you have restaking, and then it was locked again, and then you have liquid restaking, and then you can borrow against it again, and even loop it a couple of times. So people just love maximizing their returns given a certain risk. Also treasuries, like in the ICO mania in 2017, we saw all these companies. Yeah, Ethereum was 2K. They raised 20 million. They have 10,000 Ethereum. Staking wasn't live. So what do you do with it? Basically, you put it in Bitcoin, ETH, and some stable coins. But yeah, it's also just sitting there. Now again, we have stablecoins that may pay a yield, who are backed by treasuries. So also these corporate treasuries, I mean Tesla and MicroStrategy, they are using their cash and cash equivalents to put in crypto because they fear the US dollar is just not such a stable asset anymore. In the Netherlands, also after the pandemic, inflation was in 2021, it was 8% year over year. In 2022, it was 14%. Yeah, that also means that the dollar or the euro in this case loses its buying power by in 1 year 14%, and it compounds. And next year it was then 6% in 2023. So again 6% it decreases, while interest rates were in that period at their zero lower bound. So basically you're losing money if you're in treasuries. Now that's maybe not the most ideal scenario for these corporates. So yeah, they can also just loan against it or use their stablecoins or cash equivalents to perform DeFi activities. Just loan it out on Aave. Like you were saying, you have these Morpho vaults that pay 6 to 8% with very moderate risk. And if the only risk is smart contract risk, because counterparty risk is not there. If you have 100K worth of Ethereum and you loan 60K, if it decreases till your Ethereum 61K, it gets liquidated, it gets converted back, and then you get your notional back. So there are a lot of new opportunities opening because of this opt-in, opt-out, automated money architecture, really.
Thank you. We probably have time for one more question, if there is any. If not, I would say let's give a big round of applause for our panelists. And feel free to find them later here in the, in the van somewhere. And thank you very much. So now we are having lunch break. See you later on the stage at 2. Thank you.
Thanks a lot, guys. Enjoy Naples.